Ladies and gentlemen, welcome back to the channel. We're going to get into everything you need to know about AMC stock as we are wrapping up the last 2 minutes of trading here. AMC stock is up 6.63%, having a pretty strong start to Monday, and as I have said many times, we're probably going to have a pretty strong week in general. So we have a lot to get into in a very short amount of time. I also want to share with you guys a chart of Black Monday back in 1987 that looks eerily similar to this week, and this chart that we're seeing, boy, do we have a lot to get into. Hit the like button and subscribe to the channel and source your comments, questions, or concerns down below in the comment section. So first and foremost, let's acknowledge what we talked about in the last video. For any of you guys that did not see that, essentially what's causing AMC stock to rally today is the actor and writer strike that looks to be coming to an end. This is one of those things where it really is pushing out a lot of the movies that are supposed to go to theaters by this year. A lot of those movies are heading into theaters in 2024. So it's not great fundamentally for AMC. And if this strike were to last, call it another 6 months, you could really have had a huge gap of just no movies going to theaters because studios are really trying to optimize any revenue that they were going to make from any of these films. So this is fundamentally positive, as we have talked about many times before. Fundamental positive or negative news is likely to have a bigger outsized effect on AMC stock now that your writer strike is essentially over with and this court proceeding is all but over with. Let me go ahead and turn on this light as well, get you guys so you can see my pretty face again. So that is definitely going to have or allow AMC to have a positive effect if we get positive news. For an example, what I mean by this, like I've said in the last video as well, you've seen a lot of positive news recently. All you've basically gotten is positive news, minus the court proceeding, minus the dilution. Fundamentally speaking, it's been basically nothing but good news. Now, the problem here is we've had this court proceeding over our head. We've had this dilution over our head. Now it looks like that dilution is over with. The court proceeding is over with. The markets will now react to good or bad news. Now the markets have reacted with AMC stock to bad news basically every time it comes out. Fundamentally, you've always reacted to the bad news, not so much the good news. So here, if we start to get more good news, it's going to have a positive effect on AMC's share price, and that's something to consider. Now, like I said in the last video as well, when you are in the last 2 weeks of September, you are seasonally very weak. Okay, it's not a great time to be in stocks in general. It's the worst 2 weeks of any given year. Now, we know that 2024 we're going to see a Fed-induced recession. So specifically right now, hedge funds and institutions, as they end their fiscal 2023 calendars, they're saying, hey, we should book some profits here. We should hedge here instead of buying stock. A lot of hedge funds and institutions are likely selling stock and going to be net hedging into the end of this week. So Monday, we seen today a little bounce in the S&P and the NASDAQ. S&P up about 0.5%, continuing to rally into the end of trading. But this doesn't matter as much because the end of this week, you're probably going to see a lot of downside pressure on the markets. That is a potential risk for AMC stock as well. If we do get a lot of downside in the markets, you never know how AMC is going to take it. You never know if AMC is going to be really, really green when the markets are really red, or if AMC is just going to follow the markets and be even deeper in red territory as the markets are also selling down. So that is something, to consider, to keep in the back of your mind. So that's important. just expect more selling towards the end of this week could have a negative impact to AMC. Now, when you think about this logically, and the reason why I think AMC is going to have a strong week this week, you don't really want to be short in AMC in 2024. I mean, look, you're bottoming out, you're down massively, you're lower than you were at back in January of 2021. Do you really want to try to squeeze the last dollar or two out of AMC when AMC stock could easily rally back to $20, $30, $40, $50? At some point in 2024? Probably not. Your risk to reward looks very poor if you are short in AMC. So that probably means you're going to get some covering of some of those short positions. Now, this is obviously me just connecting the dots, and in reality, anything can happen. You guys understand that. So take that into consideration as well. Although it looks like the risk to reward is really good for AMC, it doesn't always have to play out as it theoretically should. Now, another big factor of this week, you are going to see a lot of FTDs that come due today, tomorrow, and on Wednesday. Today, you're going to see FTDs amounting to about 25 million FTDs. Tomorrow, 36.5 million FTDs, and on Wednesday, about 51 million FTDs. So quite a bit of shares that could be covered on as far as the FTDs and the T plus 35 settlement time. So that is also something to consider that could have an effect on AMC's share price. When you mix in just the overall kind of poor risk to reward being short in AMC heading into 2024, I do think these things make for a likely strong end of this week. You've also been seeing Citadel, Jane Street Group, Citi, Bank of America, Goldman Sachs, basically all of your big financial institutions have switched from being very negatively positioned in AMC to last quarter in the 13F filings that we just got being very long positioned in AMC stock. Now take a look at this post from Charles Payne. This one is funny. He says, would you rather lawyers, PhDs, or successful folks with college degrees running the Fed? 80.2% of individuals said no college degree. Of confidence in the Fed, their 70 economists are getting things all wrong, and we are sliding into a recession. Markets are starting to price that in, and it's not having a good effect on the markets, and I don't expect that it will. Now, if you guys take a look to Twitter and go to the short bear, he says if 1987 is to happen again, next week should be it. And this was Black Monday when markets dropped 20%, but you did see big drops in the previous days before Black Monday actually hit. He says structurally it's a different world, but these types of events only rhyme. Scary proposition I see all over Twitter this weekend. This was viewed on X 828,000 times, and look how similar the charts are from back here in 1987 and to where we are right now. It's actually quite eerie. Okay, almost following each other to a literal T. So, who knows? Something could be about to break. Who knows? We don't have to fall like this, but it's possible that we do, is basically the long story short here. It's a possibility. You should keep on your radar. Okay? Keep that in mind. On top of that, just in kind of relation to this positive week that we could have for AMC stock, it's been a very long time since you have seen the calls outpace the puts by a 2-to-1 ratio on any given week. And that's what's happening this week. At the time of recording this video, I'm sneezing apparently. If we refresh the stock tracker data, we do have calls in the money of about 15,000, calls out the money of 82,000.
Dad, I'm making a real bed.
Yep, go make your real bed. Puts in the money of 10,000, puts out the money of 44,000. So literally a 2-to-1 ratio from calls to puts. And if you do see the bullish activity pick up in AMC stock throughout kind of the rest of this week, or at least really today, you've seen the bullish really pick up. The bulls were in control today. If you see that tomorrow as well, you're going to get a lot more people positioning for that really potentially end of the week rally in AMC stock. And as far as the option activity, that certainly does imply we could see quite the rally. Now, something else I want to kind of discuss here in this video is what happened to treasuries today. So your 10-year treasury was up 10 basis points, and your 2-year treasury was actually flat on the day. Like literally flat on the day. So what this means is your longer end of the curve is rising when your short end of the curve is staying stable. This means your yield curve inversion, this chart is not updating ever since September 22nd. So coming tonight, this should update, but you're steepening here on the yield curve inversion. Now, anytime that you steepen on the yield curve inversion is actually usually right before you go into a recession. Now, even back here in August of 2019, you were inverted, you started to uninvert, and you went into a recession. Back here, you were uninverted, or you were inverted in 06, 07, and then you started to uninvert. Quickly thereafter, you went into a recession. Same thing back here in the early 2000s, same thing back here in the 1980s, right? Once you start to uninvert, that's actually the problem. So that's happening right now. And you're way more inverted than you have ever been. So this is kind of a recession indicator that potentially says, hey, this is not great. Now, today you did get some economic data. Tomorrow you're going to get more economic data. And then Wednesday, Thursday, and Friday is going to be the big day. Now, the data that we got today was Dallas Fed Manufacturing Index. This came in at negative 18.1. You were expecting negative 10. Now, last month's reading was negative 17.2. So you're even worse than last month, and markets really shrugged it off. That's pretty recessionary data. Now, tomorrow you are going to get the S&P Case-Shiller home price year over year, month over month, home price index year over year, month over month, house price index, new home sales, CB Consumer Confidence, Richmond Fed Manufacturing Shipments, Richmond Fed Services Index, Richmond Fed Manufacturing Index, Dallas Fed Services Revenues Index, and Dallas Fed Services Index. You're also going to get Fed Bowman that speaks at 11:30 p.m. as well. She was one of the Fed speakers on Friday, which caused stocks to really sell off towards the end of the day because she, as well as Fed Collins and Fed Daly, were all three of them reiterating just how incompetent the Fed is, saying that they have a lot more work to do. The economy is doing great, things of this nature. If you look anywhere, the economy is not doing great. The economy should not be trying to withstand 5.5% federal funds rates. The federal funds rate should be 5% or lower, given what's happening in the economy. We should be talking about rate cuts, not rate increases, not keeping rates unchanged until July, according to the Fed Rate Monitor tool. The Fed's incompetent. You're going into recession. So just a quick little warning for any of you guys as well. You want to make sure your financials are in a relatively good place right now. The sooner the better. And then on Wednesday, you're going to get durable goods orders. On Wednesday, you're also, no, it's Thursday, you're going to be getting a speech from Fed Jerome Powell. Fed Jerome Powell, we'll see if he kind of walks back some of the comments he made during the last FOMC press conference that really sent stocks downwards. The comments about a soft landing is not the Fed's base case, some of those comments. We'll see if he walks some of that back. Now, you're also going to get the Kansas Fed Manufacturing Index, GDP sales quarter over quarter, final estimates for GDP basically across the board, and initial jobless claims. You really want to watch the initial jobless claims. If these start to rise, this is very much seen as a forward-looking indicator, or at least a current indicator of the labor market. So if you're likely to see unemployment to rise, you're likely to see initial jobless claims rise before the unemployment does rise. So go ahead and keep that in mind. And then Friday's going to be your big day as far as data. Personal spending month over month, personal income month over month, and core PCE price index month over month. I'll tell you right now, inflation does not even matter at this point. The Fed made it very clear they need to see a recession before they actually start cutting rates. So if the markets want to see lower rates and they're looking forward to rate cuts, really it doesn't matter what inflation does. Even if inflation goes back to 2, the Fed wants to see a weak economy. That's it. That's just the simple fact of the matter. Now, personal spending month over month, you're expecting that to fall quite a bit. Personal income is expected to rise quite a bit, and PCE on a headline basis is expected to rise month over month and year over year, whereas your core inflation is expected to stay at 0.8. 2% month over month. So this could be some really big data coming on Friday if personal spending does miss, or you start to get signs that we are heading into a recession or that we're already in a recession. That's really what you want to be watching here, okay? Now, let's switch back to the Ortex data. Let's take a look at the put-to-call ratio. You're finally under the levels you were at back in June of 2021 when AMC stock was hitting its highest levels. You have less puts relative to calls now than you had then. That is great. We have been at a very high put-to-call ratio. Starting to see this fall can open the door for a lot more bullish activity and an upside move in AMC stock. Now, if you look at the Ortex data, got to take it with a grain of salt, like I say many times, but we've went over it every day for like 2 years now, so we'll continue to do so here in these videos. You have a short score of 68, $192.8 million worth of short positions currently in AMC stock. Estimated short interest on free float at 12.79%. Free float out on loan at 13.89%. Shares out on loan 27.5 million. Days to cover 2.04. Cost to borrow 5.98%. And utilization at 56.77%. So that is going to go ahead and do it for this video. Again, I'm very bullish on AMC stock throughout the rest of this week, but it does depend. If we do see a big kind of crash towards the end of this week, that could obviously affect AMC stock quite a bit. I should also point out AMC stock is now above $8 per share. That is great. If we start to get above 9 and get above 10, that's where you see a lot of options go into the money on the call side. A lot of puts go out of the money on the put side. And that could lead to a lot of buying in AMC stock towards week's end. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.